Welcome to the State of the Markets podcast. I'm Paul Rodriguez of thinktrading.com.
I'm Tim Price of pricevaluepartners.com.
And our very special returning guest is Akhil Patel. Welcome back to the show, Akhil.
Thank you very much. It's a pleasure to be on again.
Oh, it's always fantastic to have you on. And you were on earlier this year. What have you been up to with your book, The Secret Wealth Advantage, one of the premier books on finance and cycles, and everybody should go out and buy it right now?
Well, thank you very much for the plug. Well, in relation to the book, I'm trying to sell copies, so your seal of approval, I think, will be very helpful. No, I mean, I think I've been quite. It's been quite a busy year, but I haven't written as much as I'd like. I certainly haven't written another book or even thought about starting another book. But I am doing a lot of kind of reading and talking to people about what's going on in relation to the economy and in relation to my cycle framework. I think we're finding that as you get to the peak of the cycle, which we're getting to, and we can go over the sort of basic contours of the cycle again if you'd like. You tend to get a lot of conflicting information. On the one hand, you have markets at all-time highs, you have most investors in profit, and that has what economists call a wealth effect, which generates its own economic growth. And then on the other hand, you see that there are vast swathes of the economy that are really overstretched and really struggling, and some of that shows up in the economic data as well. So trying to kind of piece together all of that and get a sense of how close we are to the top of the cycle, and what might be the thing to tip the cycle into the next phase, which is the kind of crisis phase. And when that might happen is rather complicated. So I'm spending all of my time trying to work that out.
So for people who are hearing you for the first time, could you just give us a 30-second breakdown on how you got involved in cycles and how you got involved with writing the book?
Yeah, of course. Well, as a lot of stories of guests on your podcast have shown, it sort of all begins for me with the financial crisis in 2008, and my family, being in sort of pharmaceutical wholesaling, had a lot of problems precipitated by the bank withdrawing financing. As banks do when they're facing a crisis, they withdraw lines of credit from small businesses to shore up their balance sheets. They tend not to do anything with the large businesses because they're much more difficult to deal with. Have to sell off large kind of factories and property portfolios and so on. It's hard to do that in a crisis. And we're working in an industry which shouldn't really suffer in the same way as cyclical industries, because people don't stop getting ill. Independent pharmacies still need to supply their shelves with medicine. The NHS being a very large purchaser of all of these things, backstopping the sort of health economy, it shouldn't really be affected so much by the cycle. But nonetheless, none of that's relevant to a bank when they're looking at how to kind of preserve their balance sheet. So we had a lot of trouble. It precipitated a series of issues which are still with us today. Anyway, at the time, I thought it can't be the case that we were unprepared for this in that way. Weren't reading any sort of insights from the mainstream media, from people that I thought I respected in terms of their opinion and commentary. And I thought, well, there's something more to this that I'm not seeing. What is it? And how can we be ready for the next time? And I had a bit of a clue, because I remember the early 90s being also a time when the business had some trouble. And we had a sort of major economic recession. People had negative equity, people losing their homes and their jobs and all that sort of thing. And I was thinking to myself, this is a repeat in some sense. I hadn't really understood what was going on in the early 90s because I was a teenager, but I had a feeling of deep insecurity. it was being replicated again in 2008, 2009. I was saying, well, these two episodes are linked, and what's the link and why are people not talking about it? So that led me to discover that there are people writing about an 18-year cycle. It's an 18-year boom bust cycle, and it's sort of typically 14 years up. I talk about a mid-cycle recession halfway through. So you get in the 14 years up, it's sort of 7-year segments interrupted by mid-cycle recession. And then at the end of year 14, on average, and quite kind of, there's very little spread in that average, you get a major crisis. Sometimes it's a really significant financial crisis. Sometimes it manifests itself as a sovereign crisis. Sometimes it's a really severe economic depression. Sometimes it's all of the above. And businesses shut down, banks collapse, the stock market crashes, property prices fall very significantly. And it takes several years to sort out. And we went through that process between 2008 and 2011, 2012. And I've sort of said to myself, well, having discovered this 18-year cycle, I'm going to try and develop a body of work to help people practically take advantage of that dynamic, both, to buy at the right time in the cycle, and then be prepared for the crisis when it eventually arrives. And so that's what I've done through my newsletter, and that's what I do in my book, The Secret Wealth Advantage, where I essentially just create a story of the cycle. I illustrate it with different episodes from history because it's a very long cycle. It's been going on for over 200 years. And I give people practical ideas on what they might do with their investing and their business decisions. So it's supposed to be explanatory, predictive, so you can track the cycle and know what's coming next. And it's also supposed to be...
I would highly recommend it, obviously. But let's talk about where we are now in the cycle. What sort of part of the book do you think we're in? You mentioned that the crash might be coming. You're looking for signs of that. So what chapter would you say?
Yeah, so I sort of said that the last crisis was around 2008, 2009. Obviously, everyone knows it, the global financial crisis. The peak of the last cycle was around 2007. And so you add 18 years to that, you get to 2025, 2026 is actually an average 18.6 years. And so we're looking at arriving quite close to the peak of the current cycle, which began around 2012. So just to run through the story of the cycle, you tend to have 2 or 3 years of really bad problems, a series of rolling crises, I think actually is what happens. You had the sort of major things in America in 2008. In 2009-10, it's rolled into Europe. So the Euro crisis, the really significant fall in the Euro in 2011, for example. In 2012, people were still talking about trickle dip recessions and so on. You had Mario Draghi saying, do whatever it takes to stop the euro. Now those sort of key kind of events tend to mark the passage of one phase to another. So for me, that was probably the end of the cycle. You also had, things going along with that, and the sort of LIBOR scandal and other things like that. So it's a really ended for me, all the kind of bad news, all the kind of crap that had built up over the course of the previous cycle had by and large come out. Now, it doesn't mean that everything had come out, but, all the really big kind of things was in the public domain. And one very good sign of a new cycle kind of turning is that when you get these really big problems coming out, markets fall, but they fall to a slightly higher level than the real low of the market. So famously, the S&P 500 was at 666 on the 6th of March, 2009. It didn't get back to that level when you had the market falling in 2010. I think we had a flash crash in May 2010, if I recall correctly. We had quite a significant move in July, August, and September of 2011. That brought in a higher low, and then we got a higher low in 2012. So the cycle was turning. We then had 7 years of pretty significant expansion. It was and is often around a new way of doing business and a new kind of economic paradigm. We're very much kind of virtual economy now. So everyone's on their smartphone, everyone's connected on 4G. There's all sorts of businesses that are opening up on the back of that. And actually AI, just as a side aside, we might come back to the AI is based very much upon all of the data that was put into the public domain, the explosion of data and information as a result of things like smartphones and very fast mobile connectivity and so on. We had 7 years of expansion. We were looking for a mid-cycle slowdown at around 2019, 2020, which we got. The slowdown started in 2019. It was exacerbated by the COVID crisis, but actually COVID ended the mid-cycle recession. It enormous kind of reflation of the economy as a response to the pandemic. And then we're looking for a further 7 years up, which brings us to, late 25, early 26. Now, when you get the crisis, it doesn't mean it happens immediately after the peak. You can have a bit of a lag. And in fact, markets can even go up after the peak of the cycle, because the cycle is, and we could come onto this as well. The cycle is based upon what's going on in the land market. It's a real estate. It's a land cycle. Land being a very important factor of production, which drives the economy. And so you might get some additional kind of upside in some markets after the peak of the cycle, as we got in the 1920s. But then, you then have a really major crisis. And it can involve, all sorts of things, property prices on average falling about 20 or 30%. But, in less favorable locations, much more significantly than that, it can involve, the stock market falling on average 50%, but sometimes much more than that. Any number of banks collapsing, etc., bailouts and all the rest of it. So we've got all of that lovely stuff to look forward to, I think, in the next sort of 2 to 3 years. Will it happen next year? I'm not convinced. I think we might have, there's potentially more kind of speculation and of nonsense to go. It doesn't seem to be stopping anytime soon. So will the crisis begin next year? I wouldn't necessarily say hand on heart. I think that's what's going to happen. But I think the next 3 to 4 years during this sort of crisis phase of the cycle will be really quite difficult, economically, politically, socially, and so on. That's kind of where we are.
To what extent is government the problem here rather than the solution in terms of its intervention in markets?
Yeah, okay. I mean, it's a really big question. We had the sense that the government is, on top of the system. I mean, the way that media reports about central bankers, pulling the strings, it was either central bank manipulating interest rates, or it's, the Treasury Secretary issuing bonds or government spending. And so you have a sense that they can kind of manage the boom and bust cycle. And indeed, that's one of the great myths about it. Our system is that, you have these people with the power to do that. They're very much part of it. They cause the cycle to reset and repeat because they bail out everything and they create the conditions for the cycle to start again. We saw that very much after 2008. They amplify the cycle because I think you've seen in recent days the White House floating the idea of a 50-year mortgage. I think by the end of the cycle, the only idea they have for generating economic growth is to somehow stimulate activity in the property market. So it's boosting construction, it's getting people to buy and sell houses, and so on. And that does generate growth, but it's a house of cards, almost. I'd say almost literally. And
we seem to be taking the opposite view here. We've got a Labour government that seems to be determined to destroy everything.
Yeah, but even I don't disagree with that. But even then, it's all this kind of stuff about needing to build 300,000 homes a year and reduce planning regulations and get people building on the green belt and other things. So And I think that is probably the only really major proposal they've got for generating economic activity. I mean, there might be some other things around making the UK the AI superpower of the future, which, sounds a bit laughable, to be honest. So it's even here we're tearing things down potentially, and really wrong-headed economic policies, but it's interesting to see how much of it is tied to trying to do something about the housing market. And it's become such a big hot button political issue in all Western countries, and a major topic in many elections, including the recent election for the mayor of New York. His base, he cuts across lots of, a number of different demographics. But the commonality is that they're quite young, and a lot of them are renters and do not have any possibility of ever being able to afford property in the kind of greater New York area, whatever the term is. So governments very much through intervention exacerbate, propagate, amplify the cycle, and are doing so again.
You came on the pod for the first time in 2020, I believe, or maybe in 21. But either way, we're in the throes of the financial market sort of meltdown and the economy's crashing and everything looking awful. And it was at that point that you made the call, because of your understanding of the cycle, that the property market would hold steady and go up, which was so extraordinary that obviously led us to realize that you really did know what you were talking about. And you've made a series of very accurate calls ever since, which highlighting what's going on in the UK market. I know you say this is a broad brush cycle, and you can like with the stock market, it may go up, but your shares might not go up. Part of a property in X area might do very well and X area might not. But broadly speaking, this is the direction of the market. So with regard to property at the moment, I'm hearing a lot of people say that the stamp duty in the UK, I know it's obviously different in America and everywhere else, but in the UK, stamp duty is causing a lot of problems with people wanting to downsize, wanting to move, but can't, because it's forcing them, that the amount that they're going to have to pay in order to move just doesn't make it worthwhile. Is that something that you think even a Labour government might change in order to kind of unlock more activity? Because we've got a budget coming up, and there's a lot of very nervous people around about what they might do and whether it might trigger a kind of intermediate market correction and the sort of wobble that might test a few nerves, if you see what I mean.
Yeah, in relation to property or the stock market.
Well, kind of both. I mean, the property market, the stock market is on a tear, and that was going to be a follow-up question about you mentioned that there's a split between the markets and the economy, and I was wondering what. Clearly, the markets are going up, but I was also wondering what you're seeing in the economy, if it ties into this question as well.
Yeah. So, I mean, just in regard to stamp duty, I mean, every property market has its own particular distortions or frictions or problems. And the fact that it's, we have very expensive property in the UK, and it's really hard for people to put together a deposit. And then in addition to that, you have to find some additional cash to pay the government when you want to buy something, is a massive problem. And I think they have been floating the idea that actually, rather than the buyer pay the stamp duty or the buyer pay that tax, the seller, who's probably quite likely sitting on a very significant capital gain, pay it, much more likely to result in a transaction. I mean, it makes a lot more sense, if you ask me. But of course, there'd be an adjustment process, and you need to make sure it's fair. And the problem is you can't get rid of this tax, because you can't avoid it. And And so all you can do is you slow down transactions in the market, which is clearly one of the effects of it. People can't downsize, so they don't have the cash to front up the next property purchase, particularly if they're retired and so on. And that, means that people can't access kind of, properties and locations where they want to live because, to raise a family and so on. So it creates a lot of problems in the market. I think the government is trying to do that. If they made some relatively sensible proposals on that score, I think it might wake things up a bit, frankly. But, who knows? In relation to the broader kind of economy versus markets, I mean, a lot of financial markets these days, they're not really priced on fundamentals. They're priced upon flow of capital into them. The UK was very much underweight in many portfolios, and given that there's a lot of money going into stock markets, I mean they're all kind of pushing or at all-time highs. The UK was likely to be the beneficiary of that, and also a lot of companies are earning in other currency, principally dollars. That I say companies that are listed on the FTSE, to the large the sort of large cap index. And so the falling pound is helping that. And it's on a tear and it's got a lot of momentum. And I'm actually not very surprised that that's happening. You tend to find that the stock market kind of rides the cycle up, very clearly. So you get your lows at the start of the cycle. It's 2009. I mentioned you get higher lows when the cycle actually started in 2011, 2012. You got I think the most significant correction in 2020 at the mid-cycle. I know that the UK has kind of been going sideways for a long time after the sort of invasion in Ukraine and so on. But once it broke into new highs, it's been on a tear, and I expect that to continue up for a bit longer. So even as economically things seem getting worse and worse, I should say, and apologies to your listeners, because I'm flipping between saying kind of talking about fundamentals and then talking about high level cycles. You had Andy Pancholi on a few weeks ago. He was talking about 100-year cycles, very powerful. And I don't just look at 18.6 year cycles. I look at all sorts of cycles, different lengths, 30 years, 60 years, 100 years, 250 years, and so on. There's a very clear 100-year cycle. And the UK in the 1920s was also kind of down in the dumps. They had the roaring 20s in the US, other parts of Europe, particularly after the sort of First World War issues got sorted out. The UK, we had a lot of economic problems. We had the general strike in 1925, didn't really participate in the boom of the late 20s, and so on. And so it seems that we're doing something quite similar. All the action appears to be in other countries rather than in the UK. And it's not surprising in that sense. It feels like a cyclical repeat. It doesn't mean we'll avoid the crisis at the end of the cycle, unfortunately. But we don't necessarily get to participate in the major economic boom either. So we're kind of not been in a great position this cycle. It has turned out.
Do you think anyone will avoid the crisis? Any country?
No, I don't think so. I think the only thing is that some countries are pretty better positioned to weather the storm. And that I think would be largely due to how much debt the private sector is carrying, and therefore how much sort of cushion they have to kind of handle that. I think that's basically what it is. And there are, we're very, very leveraged in the UK. And, the same is true in the US. And, essentially countries with really high property prices, Canada, Australia, and so on. So I think we'll suffer the most in the crisis, without knowing specific kind of circumstances of every country. There'll be others that aren't quite in as negative position. And then the other thing is you want to be an economy that is closely linked to the country that is most successfully going to engineer a recovery. And in 2008 and 9, it was the US and China. So, you had these really major stimulus packages. The Chinese, it was like $586 billion dollars equivalent. It seems like really small numbers now because we got used to talking about trillions.
Yeah.
The US was like $787 billion. I know that, China was, I think, in September, October 2008. The US one was in March 2009. And you can see the effect of that. I mean, that brought in the lows in the stock market. You had quite a significant boom in places like Australia. Australia is selling a lot of commodities to China, a very major commodities boom as well in 2010, 11. I can't remember what was going on in Canada. I think something similar. So if you're in a country that's well positioned vis-a-vis your kind of economic partners, then you might also kind of weather the storm better. And the Australians don't talk about the global financial crisis in the same way that we do in Europe and in the US. So I think that's sort of that's sort of an example of what I've just been saying.
Yeah, the Australian property market, from what I understand, especially around Sydney, is doing extremely well, inverted commas, in the sense that it's going up very fast, and it's going to be difficult to slow people down when they're seeing prices move that quickly. And I guess that's the problem with. Well, this is the nature of what we're talking about here. People will be looking at what's happening day to day, week to week, month to month, and not taking a step back. It's really interesting you talk about these longer cycles, because sometimes when I have discussions with people about cycles and I say, well, Akhil's talking about this cycle and Andy's talking about this longer cycle, and they'll say, well, so what if that happened 100 years ago? Why should that affect us now? And it's I think the answer to that is because these things do have an influence. It's just that there aren't that many people either studying it or looking for it to repeat, and we all get so caught up in what's happening day to day that we forget to take a step back. I kind of knew that about crashes anyway, because in the first crash in 87, which I studied, and then there weren't that many crashes after that. There was the Sterling crash in 92. But before we headed into 2000, there was this feeling that that was it. A crash happened in 87 and there was one maybe in 29 and we'd never see a crash again. And it was, that was kind of the attitude. But I just thought it was because I looked at charts, and on a chart, you can look back and see when the market's crashed, especially if you put it on a log scale, which not many people do. They don't realize that going from, 120 to 60 back in 1929 was absolutely devastating. And it looks like nothing on the chart, but actually when you look back, you see how often these things happen. And then Taleb wrote his book about anti-fragile and fooled by randomness, which I think really spoke to these things, where people just don't realize that fooled by randomness is, if you're an estate agent making a lot of money, thinking how great you are and how brilliant you are. Maybe you are brilliant, but also how much of that is the circumstance of the market going up and it helping you along.
It's easy to confuse skill with the bull market.
Yeah, that's right. That's a really good phrase.
And I mean, I have the same kind of problem in a sense. So you might know that I am on the investment committee of a fund that is designed to take advantage of the 18.6 year cycle. And it's been doing really well over the last sort of year or so. I think we're up 40% or 50% or something. And that's great. And you think, great, well, we put in place something to take advantage of the final stages of the cycle, and of course, preserve capital during the crisis and all that sort of thing. Are we great? We're up. We're doing so well. But it's much easier on the upside when everything is going up and money is flowing into markets. The real skill will be to kind of preserve it and indeed try and increase your capital when things are going down. So that will be the challenge.
Tim, I'm going to jump in with some commodity questions. I don't want to hog the mic.
Just before you do that, Paul, we talk about markets and crashes, and there's always an assumption that we're talking about stocks, but I'm much more concerned about the debt markets than I'm about equities. Do you have a view on interest rates? Or I should probably say bond yields?
Yeah, I mean, the only thing that I sort of say as
so the backstory behind my question is essentially that, I've been obsessing, and my business, we've been obsessing about the debt build up for as long as I can remember.
Yeah.
And it strikes me that the sort of the fundamental perspective would be that there's this the world is carrying too much debt. The G7's carrying too much debt.
Yeah.
It has to be wiped out in an inflationary crisis, and that seems like it may even have started.
I think you're right, and I think the analogy that I sometimes have is it's like a pressure cooker, and you get these little bursts of pressure that sort of come out of the cooker, and then if things heat up too much, or if the whole thing is not kind of solid enough, it explodes. And of course, we know from history that the economic structures aren't solid enough, and at some point it will explode. The problem you have is that it doesn't appear to be any absolute level at which the debt is too much. I know that there was this piece of work gathering, it's an amazing piece of work in some ways, gathering all this data from all over the place by a couple of academics at Harvard called, I think the name was...
Is that Reinhardt and Rogoff?
Exactly. And I think they found that, you get a kind of crisis when debt gets to, I said 90% of GDP, or public sector debt, or private sector, I can't remember the exact kind of stat. But, we're well beyond that in some cases, and things are still going on. The only thing that I would say is that you tend to find the final kind of years of the cycle is a period of rising bond yields, and very heavy debt burdens. But, debt burdens in previous cycles have been lower than they are now. And somehow the markets and the economy accommodates that until at some point, rising yields will cause something to crack. And then it sort of spirals out of control because, usually a financial institution can't refinance. No one's willing to lend at a rate that they've got used to, and that might be 3% or it might be 5% or 6%. And because everyone is really leveraged, and everyone is kind of, in a similarly pressurized situation, it causes the sort of element of doubt to be applied to everyone. And then, the flow of credit stops kind of simultaneously in a lot of different sectors. And then people have to start selling things in order to make good on obligations. And that's how the thing spreads out beyond the immediate sector that's potentially displaying a problem. So, for example, in 2008, the problems that had been built up were around US subprime mortgages. You had, I think it was a couple of funds, is it BNP Paribas, which I think by assets was the largest, or one of the largest banks in the world. They couldn't refinance. I might be getting some of the details.
They broke the buck, so they traded below par value.
Exactly. But that sort of, I think people were genuinely surprised by that. And then that sort of air of suspicion applied to a lot more than just people operating in that segment of the market, and things started to slow down. And then you had organizations like Northern Rock that were very much reliant upon refinancing and in short-term debt markets have serious issues in the summer of 2007. I mean, still things were going up in the stock market was still going up in a sense for a few more months, etc. But beneath the surface, all the kind of internal plumbing of the financial system was starting to come apart. So it's not a very specific answer to your question. And unfortunately, the problem, we've been worried about debt levels for quite some time, and they never seem to have yet, stopped things. You start to see signs. You saw the, what was going on in the gilts market in 2022. You saw signs with it of it with Silicon Valley Bank in 2023. Now, they were sorted out relatively easily, But I think there were warning signs that there's kind of pressure building up in lots of different places, and it's when it starts to, there's an element of contagion about it. And I don't think we're that far away from something like that happening. But it's unfortunately not, as far as I can tell, based upon the absolute value of the amount of debt that the private sector has.
But you can go back to your point about commodities now, Paul.
Oh, okay. No, I was going to, following on.
I think it segues effortlessly into that now.
It kind of does. But actually, I want to ask a question about, this is a tricky question to answer, but I'm wondering what your view is on why governments just don't seem to take any stock in what they've seen happening before. And we know like legends like Fred Harrison have attempted to give this information to Gordon Brown and anybody who would listen in the government to say, look, guys, I know what I'm doing. I've been doing this for a long time. I can see a crisis coming. You got to prepare. And they just all fall about laughing. And then it happens again. And then they should be listening. And they're still not listening. And part of that, you've got the turnover of government. But why on earth wouldn't they even have it as a potential option? We ought to be careful about this because we've got these experts saying that this could happen.
I mean, I think someone said it quite succinctly when when someone put in front of them the idea that the way to solve the boom bust cycle, and maybe I should have said this in relation to the previous question about government, the way to solve the boom bust cycle is a broad-based land value tax, or you might want to call it something else, but and eliminating all of the other kind of taxes on sales and income and business profits and so on. Anyway, they were faced with this sort of proposition. They said, well, that makes a lot of sense, but where are the votes in it? Right. And I think that's true. You tell a politician now, in 2 years' time, there's going to be a major crisis. And, you're going to be blamed for it. I mean, let's be honest. We human beings aren't always a very rational bunch. You've got to really understand what's going on. I mean, where is the incentive for them to do that? And similarly, when you come in at the start of the cycle, as a lot of politicians do, you tend to find there's a whole new generation of politicians that come in the first few years of the cycle because, everyone's so fed up with the previous set of politicians that led them into and through the crisis. The calculus has got to be, you've got to vote for me because it's such a bad crisis and it's really bad and we've got to sort it out and we've got to work together and you've got to vote for me rather than the previous lot who have run out of ideas. There's actually no incentive to say, well, actually, if you just waited a bit longer, we're going to be in a new cycle and it's all going to be a lot better. I mean, that kind of sounds like a vote of confidence in the previous regime. So I think the political incentives are just completely distorted.
Paul's question kind of assumes that politicians are there to serve the public, whereas it's increasingly clear that politicians serve only themselves.
Well, that's also true. But even if you were publicly minded, I think there isn't any incentive, and I don't think it's a problem just with political systems which rely on votes. It's also the case that as people are in power for longer, they don't want to be surrounded by people who are telling them, no, this is not the right thing to do. So even the advice they're getting is increasingly kind of one-sided. And you can see that very clearly with, Trump is a unique animal in many ways, but he doesn't want anyone contradicting him, certainly not in his own cabinet. I mean, they all have to sit there praising him and it has to be it's on camera. I mean, it's kind of ludicrous, kind of state of affairs. You want the sort of team of rivals approach. You want people who don't have the same views as you, and you want to have active debate and contradiction and understanding the world is a very messy and complicated place. I mean, it's the sort of approach that Plato and Socrates were talking about, 2000 years ago. We haven't really, I think, in any kind of meaningful way incorporated a lot of that. I mean, well, maybe we have, but certainly not a feature of modern kind of policy making. And And so that's Trump. But then the opposite kind of regime, the Chinese one, where you're not reliant on votes. President Xi is doing exactly the same thing. He's surrounded by people telling him that, you're great, and we're all sort of read your book and inculcated into Xi Jinping thought and all that sort of, one-sided way of thinking. You don't prosper. Your career doesn't advance by telling the big boss that he or she is wrong. And unfortunately, I think this is just possibly the nature of power. That you get into these situations, and there's no incentive to sort it out or to see reality for what it is.
Yeah, I was thinking you can't fight what you can't see, and it's a bit like when if they don't see a crisis, they don't see the signs of it, they're not going to do anything about it, and it reminds me of the markets during the dot-com boom. I was trying to sort of warn people at that point that it was very dangerous, and you couldn't. And during the crisis as well, working for a major investment bank, people just didn't want to listen. And what you were saying about the signs going over a period of time is absolutely spot on, because in 2005, from what I remember, there were signs that the markets were going down, or certain markets were going down. But even in 2007, those increased, but still they fought the system, and it just took until 2008 for things to properly turn over. But along the way, there were a lot of people who could have been reading those signs, and it's also, I mean, I'm not going to blame the press in this instance, although they've got a lot to answer for. Let's face it. They only look at very short-term accounts of what's happening, and they don't look beneath the surface to say, look, there's problems here that have been building up for many years. They only look at X is happening today, or this data looks really good, so the economy must be doing well. And I guess the politicians are just looking at that as well. They're looking at day-to-day data or quarter-to-quarter data, and unless that changes, they think that they're on a steady course.
I mean, but let's face it. Who really wants to be told when they open up their stock portfolio and it's great profits and their business is thriving, lots of customers and so on. I mean, who really wants to be told, well, that's not going to last, and in fact, don't expand, don't buy that extra factory and expand your workforce and double your profits. Put that cash into the bank and wait. I mean, no, we don't really want to hear that, because we're doing well, and people are rightly or wrongly saying, I've created this prosperity for myself, and I want to kind of keep taking advantage of it. So I think there's a lot of blindness. It's not just in the political class. It's not just in people in power. It's all over the place, and not enough people really want to sort of understand reality. And by the time you get round to the next cycle, and so when you was earlier, you said you tell people about the cycle and they say, so what? I mean, how's the past relevant to the present? By the time you get to this equivalent situation in the next cycle, most of those people who live through it are in the next stage of their career and not necessarily making decisions. And I think for me, that was always a hypothesis. When I've been writing about the cycle, I've been, people saying, well, why is it 18 years? And I said, well, it's because that's enough, the amount of time it takes for one generation to replace the other, or for people to forget. It was a hypothesis, but now I've actually seen it. It's not that we have forgotten the global financial crisis. A lot of people are talking about it still. But actually, in terms of the active decision-making that you see that, that fund managers are making and politicians are making and business owners, I mean, it's almost exactly the same kinds of decisions that we are making this time in the last cycle. Even though actually the sort of overall narrative does contain quite a bit of understanding of the last crisis, and organizations like the IMF and so on have Housing Watch and the Bank for International Settlements produces long-running data on house prices in lots of different countries, and they kind of understand that there is a link between the housing market and what's going on there in financial crises. But in terms of day-to-day practical decision-making, it's all happening in exactly the same way. And so to your point about the media, they're writing to an audience that is, frankly, not all that interested in knowing what the reality is. In addition to which, it used to be the case that the thickest edition of various magazines was right before the crisis because they were stuffed full of adverts, and often adverts for banking services and property, different houses in nice places, and so on. And of course, they weren't going to provide money to a magazine that was going to be telling them that actually this is all going to come to end very soon. So we're all, I think, somewhat culpable for the way that things are run and the sort of narrative that's given to us.
The other problem with all of this is when you're trying to impart information onto a new generation, who obviously will be the important people in the future, they really don't want, they kind of resist any kind of knowledge from people who are older because they think they know better. And they think, well, we've got all this technology, and why would we listen to you? In your day, you didn't even have a mobile phone or whatever it was. And they think they understand it. And the idea of being a cool parent just cannot be, it's very, very hard to just impart that information in that way. There's a natural resistance to younger people. I'm not saying it's necessarily their fault. It's just, I think back when I was younger, I didn't necessarily want to listen to...
It's human nature.
It's human nature to not want to take this information on and to think that anything that is old is actually, it's seen in a bad way rather than a good way. It's only when we were discussing this with Dave Hunter about how different cultures actually respect older people for the very reason that they have the knowledge that you should listen to, but we don't have that anymore. We don't have that as a culture. We think new and young and everything else is
I think
important.
there are some things that only experience can teach you, and bear markets are one of them.
That's a great line.
Live through a crisis.
That's a t-shirt. That should be on a t-shirt. But so with regard to commodities, one of the very interesting aspects of all your work is how you can effortlessly go between different asset classes and talk about, what the stock market might do, what a certain country might do, what a bond market might do, and what commodities might do. And this is, I guess, the power of the cycle and understanding it, but also the amount of research that you've done in so many different areas. You've been calling for commodities to go up for a good few years now. How that's happening? Where do you think we are? Is there more to come, or are we getting near a top in things like gold and silver and copper?
There's. So I don't know about near a top, but a top is coming. You have to distinguish between different commodities at different phases of the 18-year cycle, and commodities have their own cycle as well, which I also kind of research and write about. But sort of at a relatively high level, otherwise we get sort of lost in the weeds. Commodities also tend to have a very strong final years of the 18.6-year cycle. Actually, partly because you have a construction boom and a lot of infrastructure build out and a lot of investments in hard assets, which require commodities to be built. Housing has, uses a lot of copper, and, we have, for example, and we have a lot of infrastructure now, a lot of, investment in green technologies, in AI data centers and so on. So you can see the enormous demand for all of this, which is pushing up the price of industrial metals and copper and so on. So that's kind of consistent with the 18-year cycle. In addition to that, I talk about a longer term Kondratiev or long cycle, which is typically 55 to 60 years in length. And that is fairly close to the peak of that cycle. So we had the low in commodities in 2001, 25 years on, 25, 27 years on from that, you're getting towards the peak of the current long cycle. And so therefore you should expect to see a boom in commodities, and we're getting that. And then on top of all of that, you mentioned gold and silver. And this, I think, actually relates back to the 18-year cycle. So there's concerns about the health of the financial system. And so capital is looking for other places to go. And one of the places to go is the gold market, the gold and silver market. And we saw that very much in the kind of mid to late 2000s. What you tend to find, though, after the peak of the cycle, you have a collapse in commodities. All the demand for infrastructure and so on goes out until there's this kind of major stimulus program, but you have a major collapse in commodities. But gold and silver can have a run that continues beyond the 18-year cycle through the crisis phase, as people are pushing their capital out of financial markets and into other areas, and gold and silver is one of the principal destinations of that. So while I think we will have maybe a near-term peak in gold and silver, and I'm not saying kind of imminently or anything like that. I think we've got a bit more to run. We will have if history is to repeat, the cycles repeat in the way that I've outlined, we'll have a fall and then further upside in the late 2020s. Through the crisis phase of the 18-year cycle.
So will we get so we get a big correction during the crisis, and then what you're saying that as everything gets reflated, the commodity prices will rise in that phase?
No, so during the crisis, it's partly reflation, and there's concerns about inflation as well. But it's partly because where do you put your capital during a crisis? You're worried about the banking system. You're worried about governments having too much debt. You're worried now. Wait till they have to sort of bail out half the banking system, and so you're worried about what's going on in the bond market, etc. So where do you put your money in that situation? The gold market is one of those places. So it's kind of, it's not really, it's reflation maybe partly, but it's actually also just kind of the fear of the health of the financial system.
Yeah, capital preservation. I mean, you could almost argue that buying property would be somewhere that it's a real asset, and therefore.
Indeed. Well, people who have spare cash do put money into the property market. You get some fantastic deals. You have all these sort of major funds, scooping up lots of assets that people have to sell, or the banking system has to offload. This is one of the things that we're trying to help people do through the book and through our newsletter and so on is to have them think and act in a counter-cyclical way. So when everyone is selling, you're buying, and vice versa. Yeah,
contrary opinion theory being one of the most reliable elements of the financial markets. It's you really have to be prepared, though, to do it, because psychologically it will feel like absolutely the wrong thing to do. But I think something that you've said on the podcast before, that it's not like that. Some people think you should just trade out of the property market, sell at the high, and then try and buy back in at the low. But that it doesn't work like that, does it?
No. I mean, it's I think people rightly say that timing the markets is very difficult. I mean, it doesn't mean you can't know anything about time in relation to the markets. It's just that acting at that moment, at the very day that you get the high print and so on, and buying back at the day of the very low print. I mean, it's virtually impossible to do, and it's certainly not possible to do consistently. So you can. There are various strategies to preserve your capital, and one of those strategies might be just to hold on and wait for the recovery. And in relation to well located quality property, I think that is the best strategy. You don't want to get rid of that. It's going to generate earnings through the crisis, because people don't stop needing a place to live through a crisis. They might not necessarily afford the same levels of rent, but that's okay if you've bought in at the right time. And there's only so many places you can put money, and so property is one of them for sure. Keeping your capital in there.
I heard a while back, and I haven't had an update on this, that I think beach huts were going for some crazy amounts. There's some form of bubble forming. Is that indicative of the final phase of the cycle? And do you think that kind of coastal properties may be hit harder, and capital will come back to more central locations like London and Manchester? Or is it that those central locations are so expensive, they're going to get hit proportionately more to readjust because everyone's in a financial crisis?
The answer is central locations get hit, but not as much as the rest of the economy, or rest of the locations around an economy, because that's where the jobs are. That's where people are moving to in search of work and so on. And that's where the demand is. So they might be really expensive, but you can find people to occupy them, and so they go down less than something in a peripheral location in the edge of the city in northern Scotland, which might have had a boom because people thought it was a good idea to move there. They could work remotely, or because a large company set up shop there, and so there was more jobs going there. And so you therefore pay a higher price. But when that company closes down, or actually the company you're working for remotely says, well, actually everyone's got to be in the office. You're in difficulty, and the property market reflects that, and it can collapse much more significantly in that situation. In relation to beach huts and things like that, yes, it's a sign, not necessarily of the end of the cycle, but in the run up to the peak. People are wealthy; they want to improve their lifestyles. They read about people buying beach huts, and that seems to be the thing to have. You can nip down to Cornwall, wherever these things are, and in a few hours, and spend your half your summer there and so on. And you see all these great photos on Instagram and stuff, and so as a herd, people just kind of jump into that into that area, push prices up. But no one's going to make that kind of decision in a crisis. And so the sort of demand dries up, and the pricing gets mean reverse, as we say in financial markets. So yeah, that's just a nature of it. And you get that on a very grander scale in places like Dubai, building artificial islands with all sorts of different ecosystems and climates and other things. And that sort of never goes on during a crisis. No one's going to be silly enough to buy an apartment on an artificial island where no one else is doing it, and the government's not committing to maintaining it, and start to potentially slide back into the sea, etc. So you see that all over the place in different different scales, different locations, and it's a sign that things are going over the top. Not necessarily it's not a sign of the peak necessarily, but it's a sign of things going over the top.
Is there anything, Akhil, that you could refer to? Can politics be seen through the cycle lens?
I haven't done a detailed study of it other than in relative generalities. So I mentioned one earlier, that you get a slew of new politicians at the start of the cycle, often of a different sort of party or with a different kind of political hat on. And so you basically seem to take a new direction. But what every kind of political party in power has done is effectively just sort of reinforced, reset, exacerbated the current cycle. So it runs regardless of who's in power and what slightly different economic ideology there is governing kind of policy making. So that's the first thing. The second thing I'd say, you certainly see in some cycles, as things get over the top, that there's a sort of focus on immigrants. Certainly saw that in the 1920s. I don't know my history well enough to know if that was the case in, say, the late 60s. Well, no, certainly it was in the late 60s. Of course it was. It was the kind of rivers of blood and all that sort of thing. Immigrants from East Africa, and so on. Some of my relatives were part of that wave. What's quite interesting, though, is when you have a collapse in the property market, politicians realize that actually they need immigrants in to keep prices or to get prices recovering again. And so I think the political rhetoric around that actually changes in a crisis. Maybe not immediately. Maybe it gets worse before it gets better. But it wouldn't surprise me at all to see some of that sort of stuff flip in the next few years. Other than that, I think sort of longer term, you shift between, the sort of kind of, I don't know what to call it. I suppose it's the major economic political kind of trend. So after the crisis in the mid 70s, you had a shift away from Keynesianism to monetarism. And that sort of dominated not just the next cycle, but, most of the cycle after that. And that kind of mode of kind of thinking, I think, ended really in a material sense with the financial crisis. And then what we got out of that is a much more kind of state interventionist kind of role mode. And I think this will probably dominate not only this cycle, but possibly the next one. So if you're a small state kind of person, I think it's not going to be very comfortable for quite some time. If that kind of time span, so it doesn't last one cycle, it lasts 1.5 or 2 cycles, it continues. I think we'll see a lot more of that. It seems to me that a lot of particularly younger voters are much more comfortable with government intervening in all aspects of our lives. The kind of left and right wing approach to economic policy, I think, has gone. I think both sides strike me as sort of quite interventionist, just for different ends and on a different basis. So it wouldn't surprise me that we have the era of big government continuing. But I can't say anything more detailed than that, I'm afraid. I'm sure there is probably more to it, but I haven't really studied it in detail.
Away from the cycle aspect, do you have a personal opinion on how long this probably most despised government in history is going to last?
Which one is that?
The UK I'm referring to specifically.
That's a good question. I mean, they seem on the ropes at the moment, but governments have lasted sort of longer than that. I remember the early to mid 90s, we thought sort of the major government was going to collapse on a weekly basis. Partly because I just joined the debating society, and I had at my school, and we had to prepare for a debate as part of a competition with some other schools, and the motion was, this house has confidence in the government, and I was speaking in favour of that motion. And every week there was some other scandal, some other vote they'd lost in Parliament. So I was thinking, there's absolutely no way that I'm going to win this debate. Anyway, I suspect, as all politicians, they'll hang on till the very end. So, or they'll try to. But you don't last very long when you lead an economy into a crisis, regardless of whether it's your fault or whether there are bigger forces at play. So, I think we've got a bit further for them to go, but they will be replaced relatively quickly after the crisis hits, I think. I
came across an amazing statistic, if it's true, that every Labour administration in history, with the exception of Blair, who missed it only by a matter of months, every Labour administration in history has ended with a currency crisis.
Oh, yeah. I'm not surprised. Though I suppose in the only one, the Labour, I mean, some Conservative ones as well. So the one in the early 90s, I mean, that, even though John Major won the election in 92, it was quite unexpected. So you do get, and it was also, the election was before the fall in sterling in September 92. So it happens on both sides, but yeah, I think you might find in the UK, I think certainly since the Second World War, there's always been a heavy dose of, state intervention in the economy. And, when supposedly government revenues are fairly strong, and there's a lot of money. It's not true of this cycle. There's a lot of money to spend on public works and other things. It's more likely to happen under a Labour government, and there's enough of the majority of voters in favour of that. So it's not surprising. But then, of course, they then lead the economy into the crisis, and we get a significant fallout from that.
Sorry, Tim, I've just given you a chance to.
No. I'm always happy just to eavesdrop. So back to you.
Turning back to the property market just for a moment, I was just wondering what your opinion would be as we enter into the crisis. People are saying that rents are too high,
they are ridiculous.
They are ridiculously high, and it affects everybody and everything. I mean, people say pub prices for beers ridiculously high, but if their rents are ridiculously high, how else are they going to make their money? And so it goes across everything. All prices have to rise to take that into account. When the crisis finally hits, would you see rental prices coming down because people don't have money, or do you think they'll go up or stay relatively stable because people won't be able to buy property and therefore will need to find somewhere to live, and that will keep the rental market afloat?
We're talking about residential or commercial?
Yeah, more residential.
Residential, yeah. I mean, I think you probably have both. I sort of talk a bit about this in my book. As a maybe in part, I didn't discuss it as in a detailed way. It's more in passing as a feature of the cycle. So you would expect in crisis that rents would come down. Indeed, they do in some places, particularly where there's a lot of vacancies in the market. Again, this is reflecting back and referring back to the earlier bit about kind of location. So if there are lots of vacancies because locations have become really unfavorable, then you get a significant fall in rents. But in decent areas, you might get some of a fall because that reflects people's purchasing power. But then you, quite interestingly, in the middle of a recession, find that rents start to rise. And why should that be? That's because there's not much demand in the kind of buying part of the market, but people still need to live somewhere. So they're forced back into the rental market. And so you start to see, even in a recession, rents rising. And eventually that then, along with interest rates falling, capitalizes into a higher price for houses. And that induces further investment in the housing market, and that starts to generate the growth that begins the next cycle. So it's kind of part of the process. We're also seeing a little bit of that in London, at least. I don't know. I'm not an expert on the rental situation in Manchester and Liverpool and Newcastle and other cities. In London, when houses became really unaffordable after 2022, I mean, they were already ludicrously expensive, but when interest rates were close to zero, mortgages rather were close to zero, you could have borrowed quite a lot. But when you could only sort of get a mortgage at sort of 4 or 5%, really pushing housing further out of reach of first-time buyers in particular, we still had a very strong growth in London housing rents. And the reason for that is, there's inward kind of population growth, and they need somewhere to live, and so they have to rent. And so rents are very significantly higher than they were, say, at the start of 2020, whereas in a lot of parts of London, probably there hasn't been a huge amount of growth in the last few years in terms of house prices.
So something that's absolutely fascinating that you highlight in the book is the story of monopoly and how it was originally designed by Lizzie McGee to teach people of the dangers of land ownership by individuals and seeking rent, and how it could be played in a completely different way where everybody wins. Do you want to talk a bit about that and the upcoming? Well, I've just done a quick search on IMDb because we know that Margot Robbie was going to direct a film about it, and we're wondering what exactly that would entail. But I've just done a quick search on IMDb for the word monopoly, and this has come up. A new film with Kevin Hart is in development, and it says the movie centers on a boy from the game's modest Baltic Avenue on a quest to make a fortune. So that's, if that's not an indication of where we are in the cycle, I don't know what is.
Yeah, interesting. That's really interesting. I need to look into that. Is that she bought the rights to that film or something? Did she?
Well, yeah. Well, Margot Robbie. Is
that her production company?
Yeah, Lucky Chat Productions. She bought the rights to it. I'm just trying to see where we are with it on her. I was looking on her IMDb, and it doesn't say anything about it at the moment. So I'm not sure where it is. I'd have to do a bit more research. Yeah. But this Kevin Hart film,
interesting.
It is there, and it's obviously.
I mean, sorry to interrupt.
No, go for it.
I find this fascinating. I haven't obviously looked into it, but I'm giving you an immediate reaction. Because it's quite an interesting parallel, actually. So the story is, and I think this is kind of, quite a few people know about this now, but I do refer to it in chapter 5 in my book about why people don't see the cycle. And I start with the story of Monopoly. Now, the game, as you say, was invented by a suffragette by the name of Lizzie McGee, who was who had read the work of this American economist called Henry George, who was very famous in the late 19th century for both analyzing the boom and bust cycle, explaining why it happens, and then telling governments how to solve it, which was to eliminate all taxes other than a tax on the unimproved value of land, or in other words, locational value. So not the value of the building that sits on a piece of land, but the value of the location. And the logic of that is that when you tax someone's private wealth creation, i.e., the work, their labor, or their business risks that they're taking with their business, you're effectively stealing from value that has been created by private individuals. So you have locational value. So the idea is you tax locational value, and you're recovering publicly generated value. So I'm sitting quite close to Victoria Park Village. There's, the Victoria Park. It's a great location. It feels like a village. It's a great community here. And as a result of that, it's quite safe, it's clean, and so on. As a result of all of that, which is generated by public investment, good public services, presence of a community, nothing to do with the value that I as a private individual have generated. But I without the sort of a locational tax, I'm effectively privatizing that public value. So Henry George said, that's not right. It should be that's returned to the public, but you shouldn't be taxed on your income. You should be taxed on your business profits. Very simple idea. It would eliminate the incentive to speculate in land. You wouldn't have this kind of build up in land values. You wouldn't have businesses squeezed by high rents and so on as we get towards the end of the cycle, and which precipitates the collapse because, eventually people can't afford to pay for it all. So you wouldn't have the boom bust cycle, and also you wouldn't have inequality that essentially just mirrors the concentration of land ownership. So you have some very, very wealthy landowners in the economy that, then you have a bunch of people who maybe own plots of land in good locations. They're kind of wealthy, but not as wealthy as and then you have a massive group of people who basically living often hand to mouth. They can't afford the rents. They can't afford to heat their homes. They're just living right at the edge of, subsistence is effectively. And you would eliminate all of that. It would be, housing would be cheaper. It would be more affordable. You would not pay income tax. You have more money in your pocket, etc. Very simple idea, has been implemented in some places, but it was, not implemented in kind of major economies. Anyway, what Lizzie McGee was trying to do was she created a board game. And in those days, board games were generally linear. So you have a start and an end, a bit like Snakes and Ladders. She created a circular board game, and it was centered around this idea that actually, as as people buy up all the land, everything gets really expensive. You land on a property with a hotel on it, and you basically drained of all your cash. And eventually, you have to start selling your own properties, and you collapse. One person ends up with all of the assets, and so on, which in a sense mimics a lot of real life. You get a very unstable system, it's very unequal, and so on. It's based upon, it's rooted in the uneven nature of the property market. She then sort of said, well, the way to do it is when you land on a location that's owned by someone else, you pay them a rent for the right to occupy a house or a hotel, but you also pay a ground rent into the public purse. So essentially, the person who is developing property will get some of the value which reflects what they've developed, i.e. their housing or the hotel, but the locational value will go into the public purse. And over time, that income that's in the public purse is redistributed to people via dividend. You get, you might have noticed, I think on some of on the current board games as utilities, eventually the utilities become free. So you don't have, all these sorts of, so public services effectively become free. And you don't get this sort of situation where basically one person ends up with all of the wealth and other people with nothing. And so the idea was to kind of show that if you implemented the Henry George solution, you could very simply create a situation where everyone is doing well. Maybe, doesn't mean that everyone's going to have the same amount of wealth, but you don't have this sort of dangerous kind of boom and bust cycle where everything collapses when, most of the participants can't afford to play any longer. I think it's a kind of fascinating story. The problem is that she allowed people to make copies of the game and play it because she wanted to teach people. So it was played all up and down the East Coast in America in the early part of the 20th century. But she couldn't find a games manufacturer to really kind of take it on and sell it. Maybe the idea was that she placed too much emphasis on the game where everyone did well, or no one kind of lost and was really utterly destroyed. She placed too much emphasis on that, and they just wanted to see, you want to see the competition and the conflict. Maybe that's what makes it interesting as a game. Anyway, in the 1930s, during the Great Depression, a guy by the name of Charles Darrow came across this game at a friend's house. And he basically kind of spruced it up and made it look nice. And he had some spare time because he couldn't find any work. And he sold the rights to the game to the Parker Brothers. And they've, in those days, in that era, a game where people can, hold cash in their hand and it's kind of economic and it's the Great Depression and people are buying and selling houses and so on. It reminded them of, a bygone age and people holding money in their hands. And it became very popular. And he sort of essentially said it was his game. He got all the royalties to it. He became a very wealthy man. Lizzie McGee, while she wasn't kind of really poor, she didn't benefit from her creation in any way. Charles Darrow sold the rights to Parker Brothers.
Yes.
And part of the marketing, so in addition to the game sort of hitting the spot in the 1930s, so you could set your hold cash in your hand, and you buy and sell property. It kind of reminded people of better times, etc. So it's very popular. But one of the kind of elements of the marketing that worked really well was this rags to riches story. So Charles Darrow, he was relatively successful in the 1920s, lost all his jobs, couldn't find work in the Great Depression, and had this brilliant idea of a game. And it was, becoming really popular. So it was a rags to riches story in the marketing as well. Which I thought was quite interesting. So the Monopoly film, I thought was supposed to be about Lizzie McGee, and maybe she features somewhat, but it sounds like they're going to make it about a rags to riches a story in the film rather than something about the actual intention of the game and what it was really supposed to teach people about.
Well, get this. So we got a bit more detail from the storyline, and right. Does Baltic Avenue in America, is that famous enough for us to know it? I've never heard of Baltic Avenue. Have you heard of it?
No, I haven't.
Okay.
Probably somewhere in New York, I would have thought.
Yeah, because it says a trio of kids from Baltic Avenue discover that Charles Darrow, the inventor of Monopoly, I think your eye will be twitching there, Akhil, hid a coded secret in the game that we've all been playing for generations, setting them off on an adventure through the streets of Atlantic City, racing through forgotten underground railroads, the boardwalk, and more as they're pursued by a near bankrupt casino owner also competing to find Darrow's hidden fortune.
How interesting. Well, so it's completely I don't know where to begin with that.
It's
the hidden code is clearly not what they're going to say. And the hidden code is really, how to sort out the boom and bust cycle. But anyway,
yeah, I wonder whether that's a nod to that. It's
but that's not going to put bums on seats, is it?
No, exactly.
No.
This is the point. It's not. I mean, we to back to the point we made earlier about where are the votes. It's right. It's I mean, I think there was probably a story in sort of woman creates something, man nicks it, but and then you could use that as the way into what she was trying to do. But again, probably it's not very there's a reason why Henry George is not known about, even though he wrote the book that sold more copies in the late 19th century than anything other than the Bible. And there's a reason why nowadays not many people have heard of him, is because as I outline in the book, one of the aims of the economics faculties in America, principally in the early 20th century, was to adjust the discipline of economics such that Henry George's solution to solving the boom bust cycle wouldn't have any kind of intellectual basis. So they systematically wrote land out of economic equations. And so there's no foundation for saying, well, you should have this kind of change to the tax regime to sort out the boom bust cycle, because land is not different from type of capital, is effectively what they said. And then the further developments in economics didn't really admit of the possibility of the cycle in the first place. You have economies that find a natural equilibrium through the operation of the market, and so you can't even talk about cycles. So not only can you talk about land, you can't talk about cycles either. And so Henry George is not well known about.
The corruption of economics, as Fred Harrison wrote about, it's a conspiracy theory in plain sight. And we've discussed on the pod many times about how the education system isn't kind of fit for purpose. But this really is so fascinating that you can see exactly why it's done in this way. It's been purposely written out, and it's absolutely incredible. It's why people need to take control of their own financial destiny and educate themselves. It reminded me also of a question I was going to ask earlier about when we were asking about the countries that would do the best in the crisis. Norway seems to be on the right track with their oil reserves being used for public good. Do you think they would perhaps be in a better position as well because of that, and maybe that would encourage other countries to think in a similar way, or is that just very unlikely?
No, I think they're onto something for sure. I mean, I don't, again, putting oil rents into a sovereign wealth fund. So when I say kind of, I should maybe step back and say, I talk about kind of land as the locational value, and that's, everyone can understand that's, location, everyone understands that concept. But when we talk about land in a Henry George sense, we're talking about any kind of natural resource, any kind of thing that is naturally provided by nature, doesn't require human creation as a function of land. It's basically natural world. And So the oil in the ground, which is a natural resource, it wasn't created by human beings. That also generates kind of rents, because there's different cost of some oil wells are much better than others. But the pricing is done on the marginal production, so the hardest bit of oil to get out of the ground, and so it generates a lot of rents. In a lot of countries, that is effectively kind of privatized or frittered away. And in some slightly more enlightened places, Norway being one, Alaska being another, they take that revenue or those rents and they put it in a sovereign wealth fund and they invest it. And then that generates income that is enjoyed not only by the present day kind of citizens, but also future ones as well. Which is a much better way of doing things, not least because, eventually the resources run out. But the value of them is enjoyed potentially in perpetuity if it's well managed. And so indeed you can use that sort of collection of public revenue or rental value. You can use it to mitigate the worst effects of the downturn. You kind of saw something similar, though, in a much more indirect way in Australia in 2010, in a sense, because the government was, flush with cash because of all the commodities boom and, had benefited somewhat from that, from tax revenues and so on. It's an indirect way, but then gave people money to spend in the early 2010s. And that helped to kind of boost demands and boost the economy. And, and because of as I've said, the stimulus in China and America, Australia handled the downturn well, and also had comparatively lower levels of debt, not in the private sector, but certainly in the public sector. So I think you're right. The best way to do it would be kind of the Georgia solution that I've outlined, but that would be a way in which it could work better for some economies. And there are a few which have these enormous sovereign wealth funds based upon the public collection of this sort of public value. So Singapore is a very good example. Hong Kong has some funds based on the same kind of premise as Singapore. I'm not talking about these Saudi investment funds. I mean, that's the royal family owning the resources and putting it into a wealth fund, which essentially kind of boosts their power and influence across the globe. It's not the same thing as the Norwegian sovereign wealth fund. The UK had the opportunity to do that in the 80s or the 70s, but chose not to. Chose to spend the money on various projects and and so on, reduce taxes, which had a benefit at the time. And if we'd used that, if there'd been enlightened policy making, I suppose, and you'd bequeathed an economy that was in a stronger position and had all the right sort of investments and public services and so on, maybe you could argue that's equivalent to doing it via a sovereign wealth fund. But of course, politicians have their hobby horses and ways of frittering away money and so on. And so I don't think we have seen the benefit of that. And it's ludicrous to think that, we don't have enough money to spend on infrastructure and so on, because, our oil reserves were much more significant than Norway's. But we've run out of cash. And the world is really changing fast, really urgent need of developing the economy fit for purpose for the future. And we seem incapable of doing that. So we've really sort of mishandled the whole situation.
I have to ask the question about cryptocurrencies, because there'll be a lot of people wondering where all this fits in. And as we head towards the crisis, and as you mentioned earlier, during the crisis, people will be looking for a place to put their money. That might be Bitcoin. What do you think about that? Where do you think we're headed in the short term? And what do you think will happen in the crisis? As difficult a question as that is.
So we're talking about Bitcoin specifically, because
or any crypto, any crypto asset that you think is relevant. I mean, I guess Bitcoin, but then of course you've got so many to choose from, which is part of the problem. I mean,
it's sort of an indicator of liquidity and speculation, I think, the crypto space. So when there's ample liquidity in the system, a lot of it ends up pumping up cryptocurrency prices and supports a lot of speculation in all sorts of coins. None of which I know what they do, but they seem to go up in price, and some people can make quite a lot of money out of them. They probably may not keep the money they're made out of them, in the sense that they put them into something else and that collapses, and et cetera, et cetera. So it's an indicator of liquidity. I think the fact that performance has been relatively mixed until relatively recently, I think, is an indication that there's not a huge amount of surplus liquidity in the system, unlike, say, the period between 2020, late 2020, I was going to say 2021, but late 2020 and early 2022, with enormous boom in various crypto assets, a huge amount of liquidity created as a result of the response to the COVID pandemic and interest rates being at zero, etc., and the ability of people to speculate in them. So all these platforms enabling people to buy and sell them. So I don't see them in general having a huge amount of value in a crisis. The only thing that I would say is some of the larger cryptocurrencies, so Bitcoin in particular, Ethereum and so on, may have a role to play in where capital goes during a crisis. I've been quite interested to see, as gold has been surging upwards this year, it's been a rather different year for Bitcoin. I'd have thought that if it was going to play that kind of safe haven role, it would also have gone up. And so maybe has more of a role in terms of demonstrating where liquidity is going than it does in terms of being a safe haven. I don't really know. I think it's not the sort of thing you can really predict in advance, unless you really know what's going on in the crypto space, which I don't. So those are the two kind of positions that I have. If it's a liquidity indicator, it will obviously collapse when everything else does. It might recover during a reflation, but it may not. I don't know. If it's a safe haven, then it will fall like gold does during a crisis, and then immediately recover and be in the lead for some time afterwards. So those are the kind of two hypotheses. I can't tell you which one is correct at the moment. I've said before, the technology behind a lot of cryptocurrency is groundbreaking and will have much wider applications going forward. Probably will drive elements of the next cycle when it combines with other technologies. Will also support a lot more speculation, so fractional ownership of property and artwork and other things. I suspect it will have an even bigger role to play in the boom of the next cycle. But that's some years away. If you're still doing the podcast in 18 years, we can reflect back on that.
I hope so.
But yeah, that's kind of my thinking on crypto. It has played a big role in indulging the speculative mindset over a number of periods in the current cycle. So beginning in in the mid 2010s up to about late 2017. We had this, that's probably the biggest boom in percentage terms. Then into 2021, another boom, and somewhat less significant in most kind of recent run up, but still relatively significant in places.
One of the other anecdotal evidence type things that you look for, from what I understand, is tallest buildings and projects that are being commissioned around this time. So the Jeddah Tower, tell us about what that might be telling us.
Well, there's a coincidence of very tall buildings being announced prior to the peak of the cycle. Partly because it requires a lot of speculative behavior and mindset. It requires a lot of bank credit and investor capital going into these schemes, and it also requires high land prices such that building higher generates more rent to recover the sort of land cost. So you see the incidence of tall buildings towards the peak of the cycle, and they get taller and taller buildings until something really, really grand is announced. and that often marks the peak of the cycle and close to the peak of the cycle. And that building itself often opens up during the middle of the crisis. And all the sort of premise on which it was based, the high rents and it being fully occupied are all those assumptions go out the window, and they're often empty for quite some time. So we had for example, the 1970s, the crisis of 74, you had the Sears Tower or the Willis Tower opening up. In the early 90s, you had, for example, in London, you had One Canada Square, the Canary Wharf building opening up. And in 2008, 2009, you had the Shard. I think actually was being constructed at the time. It was opened in 2012 or something. You had the Burj Khalifa in Dubai. And so we have had the announcement of the Kingdom Tower. So I think they announced the scheme many years ago, but it got delayed and so on. But its work is resumed. I can't remember when the opening date is, but it's going to be, I think, close to, if I'm not mistaken, 1.6 kilometers. Is that right?
Well, they said target height is 1 kilometer. And
right.
This isn't from memory. I'm obviously reading it. Target height is 1 kilometer, and you're absolutely right. It was stopped and then it resumed in January 25 in terms of construction, and it's expected to be completed in August 2028. So I wonder if that's telling us something.
Yeah, well, it's often in the depths of the crisis, and usually have the absolute depth about 2 or 3 years after the peak. So if the peak is in 2026, the depth of the crisis would be in 2028. So it's kind of, it's an interesting coincidence. It's possible that something else even grander is on the cards, though I can't quite imagine what would be taller than that. So that's potentially an indication. It would be really nice if it had been announced in January 2025 and they started working on it. But of course, it was it's also somewhat publicly funded, and it's not a purely private investment, if you know what I mean. It's kind of linked to the whole construction boom of the world's longest city, the Neom thing in Saudi Arabia. I mean, it's not part of it, but there's all that kind of activity. It's very much linked to diversifying the Saudi economy away from oil and so on. So it may not have quite the same value as an indicator as maybe a slightly less tall building, but in a different location that might get announced or has been announced. I'm not up to date on what's most recently been announced, but that's the sort of principle. It doesn't also have to be the tallest building. It could be the longest one. It could be the grandest, casino, or, some other kind of completely speculative thing that would never happen at the beginning of the cycle, for example. And you have seen a lot of those schemes being announced. The biggest super yacht being built or whatever is a lot of different domains. You have, I think in the 2000s, you had all the construction in Dubai, but one of the things that I found the most interesting was these artificial islands. There's going to be about 24 of them built in the bay. So, dredging up sand from the seabed and building up these completely artificial islands, each of which was going to have a different climate. So one of them was going to mimic kind of Sweden, have snow and all that sort of nonsense. And that project got stopped in the middle of construction, or I think they dredged up some of the islands. I don't think that necessarily got round to construction. And they had to stop it because obviously Dubai ran out of money. And then after a few years, the islands were sinking back into the sea. So
wow,
it's kind of funny. Interestingly, Burj Khalifa was going to be Burj Dubai, the Dubai Tower, that they needed a bailout from neighboring Abu Dhabi, and so they had to rename the Burj Dubai the Burj Khalifa after the ruler of Abu Dhabi. So
wow,
you get into trouble with these things.
Yeah.
Another good indication, of course, is the US president, who seemed to always, as a property man, get himself involved in really grandiose schemes right before the peak of the cycle. So he had some construction projects underway, or not necessarily underway, in Dubai, or he'd given his name to a massive construction project which never saw the light of day in Dubai in 2008. And interestingly, the point you're making about the Monopoly film, he was speculating in Atlantic City in the late 1980s on casinos and other grand projects, and had to be bailed out by his dad, and no Western bank would lend to him to bail him out, so he had to find his support from elsewhere. And the suspicion is that a lot of the money flowing out of Russia helped him with that. So it'd be interesting to see what further schemes he's concocting in the current administration. What's quite interesting about Trump, and I'm quite grateful that he's in power because it's sort of making a lot of my predictions come true. It's quite clear that he's not particularly divested himself of all his financial interests. I mean, he says it's all in a trust and so on, but a lot of his sons are involved in the crypto space and a lot of the public policy that the current administration is doing. Now, while there might be some merit, they're also targeted the crypto space. And so maybe back to your question about cryptocurrency, maybe there is further developments in that space that will encourage speculation. Maybe it won't be physical buildings, but it will be some kind of stable coin scheme that's linked to his crypto platform or his coin or whatever. It'll be interesting to see. It won't be very obvious. It will kind of be partly hidden. I don't think it will be reported on. So you got to keep be on the lookout. But it would be very interesting. I think, he's a guy who likes to speculate. His history, investing history demonstrates that. And I don't think this cycle is going to be different. And the fact that he's the US president is, in a sense, not from a welfare point of view, but from a making my predictions come about point of view, extremely helpful.
In terms of Trump and building projects, do you think that that what they were calling the Trump Riviera Gaza plan might fit into that potential for the end of the cycle type property project? Because that was so left field when I saw the headline that was what was going to happen. I know they're obviously trying to settle the region and it's highly disruptive, but from his point of view, he could also be looking at it as a land deal.
I mean, I think he is. And I don't, I'm not making an anti-Trump point. I think he genuinely sees the world in terms of, land deal, waterfront land deals. I mean, that's what he's done in life. So when he went to North Korea, he was, I think one of the comments he made was, there's amazing real estate here. You can really develop it and so on. And for him, he doesn't know about or care about this kind of the point that I was making earlier about the boom bust cycle and how it generates inequality. And it's all about concentration of land ownership and et cetera. I mean, he's not interested in any of that kind of stuff. And that's public policy. That's what politicians should be interested in. He sees things as opportunities to develop, and he would see building tall Trump towers by the waterfront as an example of a good development. Now, whether it is or not, I'll leave it to other people to decide. So I think having a situation where effectively people have been cleared out, I'm not saying it was a prosperous place and anything like that but having people cleared out so you can develop land in a great location is exactly how he sees the world. And it's not just in Gaza, it's everywhere that he goes and visits, and builds connections. And it seems that, his sons kind of follow some of these connections up with potential, developments, Trump towers here, there and everywhere. So, whether it's directly linked or not, I don't know. But it's certainly symptomatic of how he views the world. And there's a long history of him behaving in that way. Now, the development of Gaza and other places is obviously a long-term project. It's not going to happen overnight. It's not really kind of the same thing as Trump building a casino in Atlantic City in the 1980s. So it's not a signal in the same way. But the kind of person he is, it's certainly a signal of where we are in the cycle. And some of his other deals, I think, are a bit more reflective of that. And when I say his, I'm talking about the Trump family which he's supposedly not connected to as US president, of course is. I think the fiction that was there in the first term has been sort of pretty much ripped away in the second term. And in fact, I think there's something his son said in an interview that I read a few weeks ago. He kind of said, well, we were trying to do the right thing in the first administration, by which I think they meant they weren't trying to use the fact that the father was president to advance business interests. Though, of course, they did do that. I mean, that was quite clear, but they were trying to kind of be restrained. He said they got no credit for trying to be restrained, so they were just not going to bother showing any restraint whatsoever. I think it's quite telling. And so I would watch what they're up to quite closely, because that might be a sign of when the peak eventually arrives. In addition to being, quite fascinating and quite blatant and, somewhat sordid and all that sort of thing. The things that you wouldn't necessarily want the head of your country to be doing or his family to be doing while you're president. And, it doesn't also extend to Biden and other Bush and other politicians in the past, is all happening right now. And it's I find it really fascinating.
Just a final question about how the crisis might play out in other countries. And it ties into your book as well, because your book has been translated into a few different languages, Mandarin being one. Is that correct?
Yeah, I think in Mandarin, it's called traditional Chinese. I don't know if that's the same thing as Cantonese.
Okay.
And Korean.
Oh, wow. Okay. And any others in the pipeline, perhaps?
No. Sorry?
Any others in the pipeline, perhaps?
I think there was some interest from a Japanese publisher. I'm not sure what's come of that. What I would really love, there was some initial conversations, but I didn't think I got anywhere. What I really love is for it to be sold in India. So, for obviously family reasons, but also because India is a very big market. And also, I think a lot of Indian readers are quite open to the idea of there being cycles and it's kind of a bit more in keeping with the culture. And also, there's a lot of construction and economic speculation and other things going on in India at the moment. So I'd be really delighted if that happened, but I'm not sure if it's what the status of the conversations are at the moment. I should find out. Is
it very difficult then to do it? Is it expensive?
So in India, the books are published in English, but it's a very different market. You can't just sell the copy that has been published in the UK or the US. Normally, a book would be a fraction of the cost in India, so it has to effectively rights have to be acquired by an Indian publisher, and they have to do all the sort of reprinting and marketing and so on themselves.
I see. Okay. Oh well, obviously hope that happens soon. But with regard to China, then, do you think when they read your book and they have a very different type of property market there, do they truly own property, or is it something that's a long-term rent?
They have long-term leases. So those have to be renewed, but I don't, as far as I know, I'm not an expert on Chinese sort of tax policy or anything. Those leases don't come with an obligation to pay a ground rent to the government. So that would be the sort of Henry George solution. And also when they're renewed, they don't come with the obligation to renew at the market rate, I don't believe. I might be wrong on that, actually. But if that were the case, then, as we know with short-term leases in the UK, when you get to a certain length of time before the expiry of the lease, effectively the value of the lease collapses. Because the person who buys the lease then will have to, when it's renewed, will have to pay another massive lump sum. So you're effectively avoiding that. The market's avoiding that when it reprices the lease a few years before expiry. I don't know if that happens in China, but it would dampen some of the speculative activity if it did. I think probably some of these leases were created not that long ago, so it was something that we might find out in the coming decades. The key thing about China in relation to the cycle is whether it first has a cycle in the first place.
Yeah.
and whether, if it does, whether it's also 18 years in length in the way that it is in the UK and the US. I think they do have a cycle, and I think it is 18 years in length, but there's not enough history. So we have to be somewhat humble and say we need to wait and see how things play out. Certainly the government has quite a lot of levers at its disposal, to prevent excessive property speculation. And they're quite willing to pull those levers. So we were talking earlier about how towards the end of the cycle, governments in the West, they have run out of ideas in terms of how to make growth, and they therefore focus on the property market and building more houses and getting more people to buy houses and so on. We know from recent history in China that the current administration is quite willing to change banking regulations and so on to stop property speculation, to stop lending to property. And it started doing so in 2017 because it felt that, the levels of debt were too high, or the amount of money people saving going into property was too much. So they're not so concerned about a property boom as politicians in the West. And maybe that will have a bearing on how the end of the cycle plays out. So again, to your question about whether some countries will weather the storm better, maybe if the Chinese have successfully kind of engineered a situation where there's not too much of a collapse generated by, falling property values and or people not being able to afford their debts. Maybe they've backstopped the banking system effectively as well. Maybe they won't have as much of a collapse in demand and a collapse in the banking system as we will in the West. And so they might be in a better position. Now, China obviously has lots of problems, and there is a lot of debt in the system, and also, demographics are very bad, and there's a lot of malinvestment in places directed by local government officials to, just to prop up, make their numbers look better and to prop up the local economy. And some of that will be targeted in the crisis, I'm sure, by the central government. And it may have a difficult time, and it's not a perfect system, and it's not a system I'd want to necessarily live under. But they're not enamored of kind of speculation and things in the same way that we are. Or if they are, they're willing to pull the plug more decisively than our politicians seem to be.
Any final questions, Tim?
No, nothing to add.
We've covered so much today, haven't we? It's been absolutely amazing. I just wondering, with regard to your publishers, are they asking you to write anything else? Or I know it wasn't an experience you said you'd want to go back to in a hurry, like running a marathon, I suppose.
They haven't approached me. If they're listening to the podcast, maybe they might want to. I have to say, I did not particularly enjoy the hard graft of writing, but I very much enjoy being a published author. So it's a necessary part of the process, and I would be quite interested to know what it feels like writing in the in the chat GPT era. So I largely wrote, well, in fact, I wrote the entirety of my book before the chat GPT 3.5 came out. And this was well before October 2022. So I would be interested to know what it feels like when authors are using AI as a tool to support their research and support their sort of writing process. So who knows? Watch this space. No plans to write a book at the moment. If I did, I'd probably focus on some of the other cycles that I write about elsewhere. And I think the main focus, and I've been saying this probably every time I've come on your podcast, is to try and turn some of my book into documentary. I am determined to make that a reality in the next few months. So I know we've spoken about it, Paul.
Yes, I'd love to help with that. Yeah.
I think I will probably. I mean, obviously, it'll be about the 18-year cycle and what can happen when things go badly. But I would also like to center some of the story around the idea that we could know what's going on if our systems and our even intellectual discipline hadn't been corrupted. So I think that's quite an important story to tell. because we accept so much of what's fed to us by the kind of the media and indeed by teachers and so on, all for maybe perfectly innocent reasons, but we accept it without critically thinking about it. And I think that's very dangerous in a situation where we're getting to a difficult point in time. We've asked to make decisions both about our own kind of circumstances, so our investments or our businesses and so on, but also asked to make decisions about who should be leading us. And there's all sorts of funny ideas knocking around about what the problem is and how to solve it. And so to the extent that I can put something in front of people to help them understand why they might be making decisions in a certain way, I think that will be beneficial. Now, what they do with that is up to them, of course, but I think people need to see some of this, what I think is reality, when making all those decisions, whether they're financial or fiscal or otherwise in other domains.
And your work with Phil Anderson with propertysharemarketeconomics.com, you provide a newsletter, and there's a free newsletter that you can subscribe to get updates. So you can start there, and then there's a paid letter that gives you much more information, of course. But that's a great place to start.
Exactly. Yeah, it's a simple sort of weekly update on an interesting piece of news that we've seen and what it means in context of the cycle. So you kind of are seeing the cycle play out in real time. I think it's a good place to start. It's completely free. If you want to understand the cycle in more detail, if you want some more practical kind of guidance, then you can subscribe to one of the paid newsletters. Again, we have a couple of those. The first one is it's called the Boom Bust Bulletin. It's very cheap. I think works out about $4 a month, and it gives you a monthly essay as well as some other bits and pieces, video content as well, so you can understand the cycle in more detail. And if you become a normal main PSE subscriber, you hear from us much more regularly. All of our forecasts and ideas on things you might want to look at in terms of your investing and so on is all in that.
Fantastic. Tim, have you got a media pick?
I think it would detract from Akhil, so I'm gonna pass for this one.
Well, I was thinking exactly the same thing. So I think we should end with
we should honour Akhil.
Yes, absolutely. we will honour him, and we hope others will too.
Actually, can I add one media pick? That's
yes,
right.
Of course.
It's kind of linked to what we've been talking about. So
please,
I should probably set it right at the beginning when you asked me about how I came to be studying the cycle and so on. My first interest in the cycle was maybe not so much about how to kind of invest in it and how to stay safe and so on. It was how to solve it, and how we could, as citizens, make changes such that we wouldn't have to go through this sort of thing, and we wouldn't have to endure the sort of inequality and so on that the cycle generates. And I was put onto that by an economics course that is run by the School of Economic Science, or it's I think now called the School of Economic Science and Philosophy.
That's where you had one of your book launches, wasn't it?
That's exactly right. We had the book launch in the building, and they run a course. It's a 10-week course called Economics with Justice, which essentially takes people through the foundation of the economy and how the importance of land and how money and banking fit on top of that, and so on. It's you can do it in person, you can do it online. I think the introductory course is very cheap, £15 or £20, or I think that's the discounted price. It might be a bit more of the full price, but it's still very cheap. And I think highly worth doing, just to get an understanding of where these cycles are generated. They don't talk about the cycle per se. They talk about the importance of land and how it fits in, and how you can definitely create a just economy, a fair economy, with some important but not complicated reforms. So I would, if we were doing media picks, I would recommend that. So it's the Economics with Justice course by the School of Economic Science and Philosophy.
Fantastic.
It might be the School of Philosophy and Economic Science. I can't remember one way around.
I'll put that link with a link to your book and Property Share Market Economics .com in the show notes. And I would say your X account, but something wonkies happen with that?
I feel I have my street credentials now that my X account has been suspended. I don't know why. It's definitely not because I wrote an insulting tweet about Elon Musk. I don't know. I have no idea. I don't know what to do about it. That's the other thing. If anyone's got any advice on that, I would be.
I think the algorithm's gone. I think the algorithm's gone crazy on X.
It has, because the person I hear from most often is Elon Musk, and I'm not really particularly interested in what he has to say. I mean, if he was purely talking about his latest sort of rocket he's building, I think that would be one thing. But he's often trolling someone. So the algorithm is wonky. So I think I tried to update something and it triggered something else, and it's been suspended. And I've written to them to say, appeal the decision. And I've not heard back from them. I don't know if they have a massive backlog or they're not interested or whatever. I didn't generate enough revenue for them because I didn't have a massive following.
No, it can't be that. It can't be that, because you're not a cost. We are effectively the product as you.
If I had a bigger following, they might be more interested in getting me back up and running. But
I don't think so. It shouldn't be that. It really shouldn't. I think you're right in saying something's gone wonky. Maybe this has happened to so many accounts that they're just overwhelmed by it. Some technical error. Let's hope it's that. But
let's hope it's that.
Yeah.
Otherwise, I'll probably just eventually set up a new account with a different handle.
Yeah. So if you're wondering why Akhil's not on X, it's because of that. If you can help with it, that would be absolutely brilliant. Let's hope he gets back up soon. But, you can definitely contact him in other ways. Obviously, LinkedIn as well. LinkedIn. And so there's LinkedIn via propertysharemarketeconomics.com. And, once again, Akhil, it's been an absolute pleasure. I always love it when you come on. And look forward to having you back and speaking in between.
Brilliant. Thanks so much for having me.
Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.